Bitcoin is about to go parabolic. It is always risky to forecast the price of Bitcoin because it depends on a number of variables, including macroeconomic conditions, adoption trends, market sentiment, and regulatory developments. In the past, Bitcoin has seen bursts of extremely high price increases or parabolic moves. How does a parabolic Bitcoin go? Today, we'll focus on a few crucial ideas to think about. Number 10, market sentiment. The market sentiment of traders and investors, which includes their overall opinions and sentiments about the future of Bitcoin, has a significant impact on the cryptocurrency's price. Favorable regulatory developments, growing mainstream adoption, or well-known endorsements from powerful people or organizations can all contribute to positive sentiment. On the other hand, unfavorable opinions could result from unclear regulations, security lapses at exchanges, or worries about environmental and scalability issues. For example, in times of great optimism, investors might swarm to Bitcoin as a speculative or value store, increasing demand and driving up prices. Long-term bearish sentiment, on the other hand, may cause sell-offs and price drops as investors look for safer investments or remove riskier positions. Keeping an eye on investor sentiment indicators, social media conversations, and news cycles is necessary to comprehend market sentiment. This data aids analysts and traders in assessing the state of the market and projecting future price movements. Sentiment by itself, though, isn't always a trustworthy gauge because market conditions can shift quickly in response to fresh information or occurrences. Number 9. Adoption and use cases. The popularity of Bitcoin as a store of value and a medium of exchange has an impact on its price as well. Demand for the cryptocurrency may rise as more businesses accept Bitcoin as payment, as well as more people and organizations invest in or use Bitcoin for transactions. By enhancing its perceived worth and legitimacy as a digital currency, this greater utility can have a positive effect on its price. Additionally, improvements in blockchain technology and the larger cryptocurrency ecosystem may expand the functionality and use cases of Bitcoin. Enhancements in scalability, security, and interoperability could draw in more investors and users, resulting in long-term price growth. To gauge the trajectory of Bitcoin adoption, analysts and investors frequently keep an eye on metrics like transaction volume, network activity, and merchant adoption. Strong growth in these areas can signal robust demand and potential price appreciation, while stagnation or decline may raise concerns about its long-term viability. Number 8. Technical analysis. Technical analysis looks for patterns, trends, and possible future price movements by analyzing historical price charts and market data. To make educated decisions about purchasing, disposing of, or holding onto Bitcoin, traders employ a variety of instruments and indicators, including moving averages, support and resistance levels, and chart patterns. For instance, a rapid and steep increase in the price of Bitcoin may be indicative of a parabolic move, which is frequently accompanied by high trading volumes and investor FOMO. During such price surges, trend lines and Fibonacci retracement levels can be used by technical analysts to determine possible entry and exit points. It's critical to understand technical analysis limitations, even though it offers insightful information about price trends and market sentiment. Unexpected changes in the market can occur, and past performance does not guarantee future outcomes. To make well-rounded investing decisions, traders thus frequently integrate technical analysis with fundamental analysis and risk management techniques. Number 7. Regulatory environment. The regulatory environment has a big impact on how much Bitcoin costs and how the market functions. Governments and regulatory bodies' announcements, actions, and regulatory developments can affect investor confidence and market sentiment. For instance, Bitcoin's legitimacy can be strengthened and investment encouraged by clear regulations and supportive policies that foster innovation and adoption. On the other hand, tight laws, prohibitions on mining or trading cryptocurrencies, or worries about illegal activity can cause uncertainty and volatility in the price of Bitcoin. In order to evaluate possible risks and opportunities, investors and market participants keep a close eye on global regulatory news and developments. Clear and benevolent regulatory frameworks have the potential to draw in more cryptocurrency ventures and investments, thereby enhancing the overall market climate. Number 6. Volatility. The price of Bitcoin is notoriously volatile, with large, abrupt swings in value over brief periods of time. A number of variables, such as trading volumes, news stories, market sentiment, and macroeconomic trends, can have an impact on volatility. Volatility entails substantial risks in addition to opportunities for traders to profit from price swings. Sharp price drops can cause investors to lose a lot of money, especially if they leverage their positions or don't use risk management techniques. Investors frequently diversify their portfolios, use stop-loss orders to limit potential losses, and keep track of market developments in order to effectively navigate the volatility of Bitcoin. Long-term investors may also choose a buy and hold approach, concentrating on Bitcoin's prospective long-term value preservation or inflation hedge. Number 5. Institutional interest. Institutional interest in Bitcoin has increased recently. As part of their investment strategies, institutional investors like hedge funds, asset managers, and corporations are increasingly allocating capital to Bitcoin. This pattern is the result of multiple factors. First of all, people view Bitcoin as a hedge against inflation and currency depreciation, especially in times of monetary policy changes or economic uncertainty. Second, by adding assets with little correlation to traditional financial markets, institutions aim to diversify their holdings. Due to its distinct features and erratic price swings, Bitcoin provides advantages for diversification. Finally, because of its limited supply and increasing popularity, some institutions see Bitcoin as a long-term store of value, similar to digital gold, with the potential for price appreciation over time. The price dynamics of Bitcoin are significantly influenced by institutional interest. Market liquidity can be improved, significant capital can be injected, and price volatility may be stabilized through large-scale institutional buying. On the other hand, market downturns may result from significant sell-offs by institutions. Institutional activity is closely watched by market participants as a predictor of future price movements and market sentiment. Number 4. Market liquidity. The ease with which an asset can be purchased or sold without materially altering its price is referred to as liquidity. Liquidity, in the context of Bitcoin, is determined by multiple factors. First and foremost, trading volume is important. Increased trading volumes are a sign of increased market activity and liquidity. As cryptocurrency exchanges and trading platforms have proliferated worldwide, so too has Bitcoin's liquidity increased dramatically. Second, the depth of the market is crucial. The volume of buy and sell orders at various price points is referred to. Big trades can be absorbed by a market that is deep and has a lot of buy and sell orders without significantly moving the price. Finally, the cost of executing trades is reflected in the market spread, which is the difference between the ask and bid prices. High liquidity is crucial for Bitcoin's price stability and resilience to sudden price swings. It reduces the impact of large buy or sell orders on price movements, making the market more attractive to institutional investors and large traders who require liquidity to execute large transactions without significant slippage. Number 3. Supply dynamics. The dynamics of Bitcoin's supply are crucial to understanding its price movement. The total number of coins in circulation for Bitcoin is limited to 21 million, and they are distributed through mining rewards. Events involving the halving of supplies and changes in mining difficulty are important factors. Bitcoin experiences a halving event roughly every 4 years, which lowers the reward for mining new blocks by half. This mechanism effectively increases scarcity by slowing the rate at which new Bitcoin enters the market. Changes in mining difficulty are made roughly every 2 weeks in order to keep block production at a steady pace. Variations in mining difficulty affect miner behavior and supply dynamics, as well as the cost and profitability of mining operations. Furthermore, a sizable portion of Bitcoins might be destroyed intentionally or lose their private keys, rendering them permanently unusable. This would further reduce the amount in circulation and increase the possibility of price growth. Investors evaluating Bitcoin's long-term inflation rate and potential as a store of value in relation to rising demand must comprehend the dynamics of its supply. The core of Bitcoin's value proposition and investment thesis is the interaction between limited supply and increasing adoption. Number 2. Technological developments. Blockchain, the underlying technology of Bitcoin, is always developing thanks to new advances in technology that increase its functionality, security, and scalability. Important advancements include Layer 2 solutions like the Lightning Network, which process Bitcoin transactions off-chain and settle on the main blockchain on a regular basis, making them faster and less expensive. Efforts to incorporate smart contract capabilities into Bitcoin are intended to broaden its applications beyond straightforward transactions, with the goal of augmenting its usefulness and widespread acceptance. In order to address concerns regarding transaction traceability, projects aimed at improving privacy features for Bitcoin transactions seek to fortify fungibility and user anonymity. Innovations in technology have a significant impact on the dynamics of Bitcoin's price because they can make the cryptocurrency more useful, make it more scalable, or solve issues that have been there for a while, like speed and transaction costs. Investors and developers closely monitor these developments for their potential impact on Bitcoin's network effect and long-term viability in the evolving digital economy. Number 1. Geopolitical factors. The price and uptake of Bitcoin are significantly impacted by macroeconomic trends and geopolitical events. Global economic conditions, depreciation of the currency, and regulatory actions are important factors. Government and regulatory agency decisions can have an effect on investor confidence and market mood. Restrictive laws can cause uncertainty and market volatility, but favorable regulations can draw investment to a country. Many people see Bitcoin as a hedge against the risks of inflation and fiat currency depreciation. The demand for Bitcoin as a safe haven asset may be fueled by factors such as capital controls, currency devaluations, or economic instability in particular areas. Investor risk tolerance and capital flows into alternative assets like Bitcoin are influenced by macroeconomic variables like interest rates, inflation rates, and geopolitical tensions. Geopolitical developments underscore Bitcoin's role as a borderless and decentralized asset, capable of transcending national boundaries and traditional financial systems. Understanding these factors helps investors assess Bitcoin's resilience and potential as a store of value in a globalized economy. Understanding these factors and their implications is crucial for investors seeking to make informed decisions in the dynamic cryptocurrency market. If you liked our video, then subscribe to our YouTube channel.